weekend all. Ira Epstein of Linn Associates with your weekend edition of your agriculture update. And this is for Friday, the 11th of October, 2019. Stock market is still open, as you can see, in terms of the indices. I'm trading right now just after the 3:30 time frame. You can get an idea where the markets are from this. Today was a pretty interesting day. I saw at the end of the day the president's news conference with the vice premier of China, so to speak. They've agreed in principle. There is nothing in writing yet. They have agreed in principle that China will buy an additional, or a total of, they haven't described what it is, $40 to $50 billion of agriculture products. We don't know what it makes up. We don't know the time frame that encompasses. There's a lot of unknowns. This today was an agreement not in writing, but an agreement in principle to put items in writing, and then in a 3 to 5 week period to try to get that agreed to go on to another phase of the agreement. Got it? That's where you're at. So we had a big up day as the market in the corn, the wheat, the soybeans, all sharply higher. And of course, we have weather to deal with as well, because we have a monster storm coming down from the north. It could be the first hard freeze of the season beyond the Dakotas, beyond Montana, Colorado, as it comes into more prevalent corn areas. Of course, Illinois might get that. We don't know what Iowa's going to get, but we're here in the northeastern parts are going to get the freeze, but we'll see. We've seen so often you get one prediction of weather and then you get something else. When we look at a monthly area chart of closes, this is the first time soybeans have been, and I want to come back from just this month. I want to show you where you ended up last month. In September, you ended up at 906, which was up and over the 892 level, which was the 18-month moving average of closes. You're extending that. So it's not just a fluke that had gotten up there. That's the important part that I'm making out. So the bias is certainly to the upside. When we go to a weekly bar chart, the market, and I'm going to take out this week, we had been fighting a battle right here. And you can see that fairly clearly. Now with this week's action, the market has reached up and over these resistance points. We know the reason for it. We don't know how many soybeans could be bought by China, nor do we know if the freeze is going to hit. But the chart action, as we look at it, has a pattern of higher lows, higher highs. That part of it is bullish. The key is not to get back under 881.5. The correction that we had 2 weeks ago so far has proven no more than that to be a correction. When we look at key moving averages, if you take a look at last week, you got up to the 100-week average, stalled. The market had come down, as I said, fought a battle here for a couple, actually about a week or so. If you come back here, you can see where the battleground was. It pulled back, didn't quite get to that 18-week average, stalled at the 100, and now the market has cleared that at the end of this week. When I look at Bollinger Bands, you got up to the upper Bollinger Band. Now, if we come back right through here, you can see you hadn't hit an upper Bollinger Band until you go back to December of the beginning, obviously, of 2018, getting into the beginning of 2019. So this is the first time during this year that the market got up to, and you can see last week it got up to 921. It hit the 100-week average right here in green. The upper Bollinger Band was 916.25, and let me just see, that was the settlement was 916.25. The upper Bollinger Band was 922.5. You didn't hit it that week. You did it this week. That's the point that I'm trying to make. So that's still a sign of sustained strength, but you know what I'm going to tell you. Often, when you go to a chart and you throw the name off it, the first challenge of a 100-week average with an upper Bollinger Band is a resistance zone. When we look at the momentum, it is up. So we have the bias up because the market's over the 18-week average. The trend is up, as you can visually see, plus it's got the higher lows, higher highs, and you've reached into a resistance area. In the meal market, you've just turned the trend to the upside on the weekly chart. You've got the higher lows, the higher highs. Let's back off a week so we can see where we were. Last week, you closed at 298.80, which was under the 18-week average. This is the first settlement over it, so that's a good sign. And now the market's got the bias up, the momentum up, the trend up. You'd have to come back under 289.30 to hurt this pattern, in fact, to take the pattern out. In the soy oil, you had gotten up, and I want to come here to show you my ideas. When you get to the upper Bollinger Band and the 100-week average, I often think that's a resistance area. There's no magic to it. It just seems to what's been on the charts before. You've pulled back. Now the market this week has come back up there. We'll see if it can get beyond that or not, but you are in that zone right now, as you can see at the end of the week. In the corn market, this is the first challenge after collapsing from the 456 level down to 336. That's not a small break. It's $1.20. It's almost a third of the price if you think about it. And you've gotten back to the 18-week moving average where resistance is found. Now, if we come back right here, and it's fun to show these things, you made a run for the lower Bollinger Band. You missed it by 3 cents, but that's close enough as far as I'm concerned. Momentum then narrowed itself in, and the market went to the 100-week average, stalled. You can see that. Here's another stall. This is the week of the 27th. Now, the market last week again hit that 100-week. Where's the next resistance? Often, I wish I could tell you every time it does that, but often it goes to the next key moving average, which I determined to be the 18-week moving average, and that's what this market's done. Has it broken its downtrend? No, but you have divergence in the downtrend. You've got momentum up, while the bias right now is down because you're still closed under the 18-week average. The key is to take out 412, so what the market does is it breaks that bearish pattern. At this point in time, there's divergence, but you've still got bias down, trend down. In the wheat market, you flip-flopped. The wheat has turned into an uptrend. Now, the battleground was right here, the 100-week average of closes. It got up last week to that 18-week, and the question on the weekly chart, would it get any follow-through, and it did. So now until you take out 476 and a quarter, you've got a pattern of higher lows, higher highs, momentum is pointing up, and the bias is up. Support comes back in on pullbacks between the 18-week and the 100-week average of closes. In the cocoa market, we have an outside week up with momentum up. Remember, on momentum on the slow stochastic, I do not look to see if it's overbought or oversold on a weekly chart. I just look if it's pointing up or down. Some people do it different than I do. I have a pattern of higher lows on the swing line and higher highs. That's bullish. What I don't want to see, if the market's going to lose this swing to the upside, is the market taking out this week's low. And the reason is it's an outside week up. When you take out the low of an outside week, within the next week especially, you throw this pattern cockamamie. That's the right word I'm going to use. Because when that's taken out, now you've got an outside week, you take out that low, it calls for a move just back to the closest moving average, which is here. Does that do any damage to the chart? I won't know until it occurs and what momentum looks like. In the sugar market, you've had a vertical price rise as the market cleared this high right over here. This was the key to the market. When you pulled back down, you don't want to take this out. If you do, you break the pattern of lower highs and lower lows. The market hit the Bollinger Band, and it's been bouncing away from it. You can see it didn't do it at that point. Momentum's still down. Now you start with the momentum flattening out, and it turns up right here. That first turn of the momentum to the upside, and this is the week of September 27th, neutralizes the downtrend, and the market stalls at the 18-week average. What are the next resistance points should the market decide to advance? One is the 100-week average, the other is the upper Bollinger Band. If the market's going to flip-flop here, it's probably hangs at this average. Often markets do. Instead, the market makes a run last week, goes up to the 100-week average, just misses the upper Bollinger Band, and now it is stalled at that number. Support back through here. What's the chart pattern? Lower and low, higher high. In the coffee market, no chart pattern to speak of. You've got the higher high, lower low. So when I say no chart pattern, it's not a trend. The market's gone into a corrective mode, coming back into support levels from back here. Doesn't seem to be able to do anything with the factor that it got higher lows and higher highs right through here, and all of a sudden it starts stalling at that 18-week average. That's a warning sign. It either picks up through this high very quickly, but if it gets under 96.85, you lose that momentum. You got under it, and that's where you're at right now. So I'm going to say no trend. cotton market getting a benefit from the idea that there might be a pause in the trade war, as China's describing it, or an agreement as President Trump is describing it. You have two different ways of this coming out. The Chinese press, and this is only, 3:40 in the afternoon, is calling it a pause. Our president, is calling it an agreement. It's nothing until it's signed, put to paper. Remember last year? Remember last May when everything fell apart when they put things to paper? I'm warning you, you're not there yet. I'm wanting it to be the right way. Higher lows, higher highs, momentum up, bias up. Next resistance point, 65, 64, support back at 61.15. Then we get to the cattle market, and the cattle market's got the momentum up, and this is a vertical price rise. The question, of course, is will the beef market be supported by this bad weather that's coming in? We don't know. But as you can see, you've had a heck of a run on this market. From this low of 93.40 to this week's high, you've gone up $1.06. That's 6. Well, I said that wrong. You've gone up 13 cents. That's a heck of a run in the market. And we'll see if they can extend. Where do you think the resistance is? I'll point to it right here. These two numbers are your resistance, support back at the 105.37.5 level. And in the hog market, even with them saying they need pork, and I'm talking the press saying they need pork in China, if you will, selling out their state stocks of pork, that market has not responded at this point. I'm not saying it won't, but it hasn't. That is factual. You've got lower highs. Now this week's low of 65, we got to 60.45, took out this week's low still. So because you've got the lower low, even if you take out this high, it's not going to give you a pattern of suddenly higher lows, higher highs. Resistance in two levels, 67, 65 to the 70 level on the chart. So I put that all together, try to come up with what's going to be, and come the morning of Monday, and I realize it's Columbus Day, but we're open here in the markets. The pits are traded on the not open on the floor, but we will be open, and I will be covering this for you first thing in the morning. So we'll be talking about what goes on in the marketplace, where we're at in them, and while the cash markets, banks and so on, are closed in some areas, you're still going to have your elevators open. We're still going to be trading the livestock, and away we go. So my goal at 6 in the morning, and that's when I record this video, is to give you trade ideas, to tell you what I'm seeing in the chart with specifics to it. This is generalities. Specifics are way different as I cover, and this is what the chart looks like, and obviously I'm not in it at that morning. I've got a headset on, and I'm recording off my computer, and I'm going to give you those touch of fundamentals. By this point, I'll be able to explain what we know so far in more detail about supposedly what's been orally agreed to, the technical analysis to go with it, and I'm going to be able to throw out my trade points. And there'll be plenty of trade points because now I don't have to worry about this for 3 to 5 weeks because it's going to take that long, the president said, to write it all up. And I cover all these different markets for you. So it's about a 20-minute tape, but the beauty is on the bottom there's a slide bar. As you slide, it's going to light up and say meat markets where you're at, grain markets. You don't have to watch everything if you're not interested in other parts. Plus, there's a lexicon on the side. Just click on the word, it'll take you right to that section as well. I realize that morning time is important to you, and I try to work around that for all of my subscribers. The cost, minimal. If you think about it, a tick in corn's $12.50. For 30 days of my video, introductory price $7.95, and I admit it jumps up to $15 for every 30 days thereafter, but you're not on a contract. You can stop whenever you want. How do you get access to it? Go to our website, www.iraepstein.com. Go to research, morning subscriber video. You'll see it and explains it, how it all works. Up here as well. Remember, with each subscription, you also get our phone application. So every time I send out an email or whatever, it's going to light up right on your phone for you. Our phone application will give you quotes, charts. You're going to be able to see my videos through them. Pretty much everything that you need to have an idea of what the futures markets are doing at any point. I'm Ira Epstein. You have a great weekend. I'll see you all Monday.